and welcome to ECCB Connects. The devastating impact Hurricanes Irma and Maria have wreaked on some of our member countries has highlighted the importance of property insurance. To discuss this very important topic, I have with me Marvin Herbert, Unit Manager of SAGICOR Life Inc. Mr. Herbert, welcome to ECCB Connects.
Thank you very much.
Mr. Herbert, when we speak about insurance, individuals tend to focus on insuring their motor vehicles. But when it comes to other properties, particularly their houses, what has been the trend?
Well, over the past years, you find a lot of persons tend to see it as something not important, but it is very important. And some persons, I think now, a lot more persons are, getting into trying their very best to insure their properties because of reasons. Probably a mortgage is on the home. But a lot of people still have the negativity towards the importance of insuring their property, right? Because I think they just look at it as insuring a building, property, but it is far more than just insuring a property. And it speaks to when you insure that property, you're not just insuring the building, as I say. There's a bigger picture, and that bigger picture is that you're protecting your family at the end of the day. That's the most important part of you making sure that that building is insured, because if that building, if there's a disaster, and that building is to be totally destroyed or destroyed to the point where you cannot live in it, it is not in good condition. If that property was not insured, you would find that you put your family in a big position of not knowing where the next step is, where they're going to go. I mean, here it is that the whole life has changed. Why? Because of you then at the point in time not taking that initiative to insure the property, because you didn't see your family. All you saw was a building. And that's one of the things that, cause persons, to really forget that the important thing is not the building. The important thing is your family.
Family, right. And that's very important. And especially if you have a family with young children in a disaster, nowhere to go, nowhere to sleep, you expose them to health issues, safety issues, and so on. So it's very important.
And we have seen that in the disasters that have just gone. I mean, we would have heard of, persons trying to seek, somewhere they could send their children to, because it comes back to the same thing. Most of them probably didn't have, property insurance. So they don't know where to turn next, because they now realize that there was nothing there to protect them, and there is nowhere there they can go for protection to help them restore what they had in place. So, they find that it just caused the family to be distraught and, trying to, make ends meet, because you don't know what else to do. Because you did not take the right step in protecting your family.
You saw a building,
right,
not a family.
Right.
Mm-hmm. So you talk about persons not insuring their properties because of the narrow view, that building, not family. They're not seeing the bigger picture. What are some of the common reasons during your years of experience of practicing? What are some of the common reasons individuals give you for not insuring their properties?
In my 20 years now experience in the insurance industry, I've come across a number of persons, a great number of persons, who felt like insuring the property was not important, because again, they saw it as, hey, I have a concrete roof, what can go wrong with my property? I'm paying my mortgage is up to date. I don't need to insure my property when my mortgage is up to date. And quickly, I'm going to just say, there was one person years back in my career in doing property insurance, is that the young lady, she had a mortgage on her home, and she did the insurance just for the period of time that the bank said they needed it. And her attitude was at the time, Mr. Herbert, I'm not insuring it again. And I said, no, you have to insure it, because one, you have a mortgage, and 2, you have a family. And I think at some point in time, she did not renew that insurance, and there was a fire. And I was reading the newspaper, still forgetting, I'm just reading it, and I saw the fire, and I said, wow, somebody's property got burned. Not really going deep into it. And then I was traveling to Nevis the next day, and I came across the client coming off the boat, and I was going on. And I, in my happy smile, said, hello, how you doing? And she watched me like, Mr. Herbert, you don't know what has happened to me. I said, no, what has happened to you? She said, the property that was burnt down in Nevis, that's my property. And I felt it so much. I mean, the reason why she was telling me is because she realized now what I was saying to her made sense. So she found herself now in a situation where there's a mortgage, and she have to be paying for that mortgage still, but she don't have a home because it was burned down. And the reality hit her then to show that if you only had that property in place, you would have been in a better position, because you would have know what's the next step to take care of your family. But there wasn't another next step but to continue paying a mortgage. And probably she may have had to find herself refinancing that loan or try to get another loan to rebuild that building. So it is very important for persons to really insure the property, because again, it is not about the building, it's about your family.
You mentioned the mortgage. I know when you apply for a loan and you receive it, you're paying a mortgage, that you're required to have insurance coverage. What does that cover?
That is very important to the bank, because the bank is not really interested in taking everyone's property if debt should occur and there is an outstanding mortgage, an outstanding loan. So the life insurance is very important to the bank, and not only the bank, also too it is important for protecting your family, because if there's an untimely debt and the bank is paid off and your family is living in that home, how are they going to maintain that home? How are they going to maintain themselves? Because you are seen as the most important person within that family. You're maybe the main breadwinner. And so therefore it is very important for you to not just, again, in doing the life insurance, just do it because of the mortgage, but you have to sit down and consider your family. You may have a family, your wife, your children, or you may just have your children. You may have, girlfriend and children, boyfriend, but it is important for you to look at the persons, the persons that are very important to you in your life. So just don't buy the life insurance because there's a mortgage, but make sure that you consider protecting your family. So the life insurance is very important in all aspects, protecting the bank and securing your family.
Recently, late last year, our region was hit by 2 Category 5 hurricanes. Number of homes were destroyed. Now, for those persons whose homes were destroyed and their properties were not insured, what is their position with respect to the banks and their mortgage?
Well, persons, when it comes to their banks and their mortgage, once they would have had their property intact, they'll be okay. Because one, if those properties have been destroyed or were destroyed, the bank would be okay because the insurance was there on the property. So therefore the bank knows to themselves that, hey, things is going to be okay. That client, that family know that they will be in a better position, because what happened is that when your home is destroyed, it is not replaced by the market value. It is replaced by the value that it costs to put it back how it was. So you'll be in a better position than if you didn't have it. So the bank would be okay, and you as the client will be okay, because you'll know to yourself that as a result of having that life insurance in place, you now could easily continue your life. There are other things that may keep you back, but that's a start in getting a home, in putting a roof over your family head, being able to take care of your family. And that is so important, because you see, at the end of the day, the bank is not really so much interested in where you go, what happened to your family, nothing. The bank would have given you a loan. the bank concern is about protecting that loan.
But let's say your mortgage is not paid off, your home is destroyed, there's nothing there. You're still responsible for this mortgage payment, but you do not have a home. How does that work?
Well, it will be difficult on
You're
the part.
responsible for
Yes.
rebuilding on your own?
No. What happened is that because that insurance was in place, when that check is written, because that mortgage is that assigned to, the property is assigned to whichever bank, that check will be given to that bank. And then the bank now would then sit with the client and then they would sort out everything. So you're in a better position. But on the other hand, I must say, where that person may not have a job, it becomes difficult because, again, as you said, there's a mortgage. That mortgage has to be paid still. They may have gotten the check to take care of rebuilding the property and so, but then the question you're asking is that how would they be able to pay that mortgage? And that is one of the difficult things because they may be out of a job. And the same thing in Dominica, let's look at it, jobs have lost because probably they used to work have been destroyed. So they find themselves not only without a home, but they find themselves without a job. And the whole thing becomes very, very difficult because you don't have any of them. Nowhere to live, no job. And there's a mortgage, there's your family to take care of, and it can drive one crazy. It can cause one to do things that they don't want to do, or they never did. But because of desperate times, you don't know what that person could end up doing, all because they're under so much pressure. And the reason why they find themselves under so much pressure, why? They never thought that, hey, these things could happen, so let me make sure that I have certain things in place that would protect my family. And a lot of us tend to neglect those things. And when things like this happen, we then see the true picture as to how important it is to make sure that there are certain things in place to protect our family.
Right. Another important issue is that of reinsuring and maintaining the value. For example, you might have built your property, let's say 10 years ago, you've improved, you've added, the value has changed, and so the insurance coverage you had 10 years ago may not be adequate for the property that you have now.
Right. That is something very important, but it's something very difficult for a lot of clients. Why? Because we know that property insurance over the years has become more and more expensive. And when one insured a property the first time, that cost is high. And then, we look at it 10 years pass by and the value of what the property was then 10 years ago is not the value now. But so many persons can't really increase that value. So they tend to just insure it for the same thing, but it's a dangerous thing because the cost of everything has gone up. Whereas you still have your property insured at that value. So if there's a disaster and there's a claim, and that is where I think sometimes a lot of things go wrong because you're now looking to get your property back together based on now 10 years down the road. But when you build it, you only had on these things here, but you want to put it back in a position now. So therefore you have to look at, you have to keep reviewing your property ever so often, the value, get the valuation of it, so you could increase it and try to insure it up to about maximum 90%. Yes. You understand?
Otherwise,
so at least
you'll be underinsured, and if something happens, what you get back will not be sufficient.
It'll not be able to help you replace that building. So therefore, it is wise for you to constantly and every so often get a value of your property, so you have a better sense of, hey, to replace my property right now if there's a disaster, I'm going to need 800,000. That's the value of it right now, not the selling value, right? But the value of replacing your property. But you may have only had it insured for 400,000. 400,000. Now there's a disaster. How could you replace that property now that the building material gone up, the cost of everything has gone up, but you only had it insured for 400,000. So therefore, when a claim is made, there comes the problem. Because you're looking to replace a property to say 800, but you only had it insured for 400. And when the deductibles start to come out based on not 400, but 800,000. You understand? So I would advise persons to always take the opportunity, you know, a few years after, you know, get an evaluation of your property and review it and see what's the value of it. That would help you to make sure that your property has a true value on it when you're insuring it.
Okay. We focused a lot on the structure when we talk about property, the building. However, as we've seen with the recent storm, building and whatever is in the building, everything was destroyed. So what is your advice with respect to covering your other assets?
I recognize now that a lot of persons don't study insuring the contents. I don't know why. I don't know if they have gone away from understanding the importance of, you know, insuring these things, because they are very expensive. To buy a refrigerator, a stove, a washing machine, chairs, I mean, by the time you already add up all that you would have done and spent money for, you may have spent maybe over 20,000, 30,000, and you did not really realize, hey, this is the kind of money I've spent for this. So in your house being destroyed and your contents being destroyed, you may not be able to buy back the things that you had in the home because you didn't have them insured. And it is important for persons to insure the contents and continue reviewing them. As they add things to the home, they keep adding it to the list because it is very important. So if you're going to change your refrigerator, you add it to your list. You know, it is important to do that again, because it helps to make sure that in restoring the things that were there, you have the opportunity to have that money to buy back, you know, your fridge, your stove, you know, the things that could get you going, the important things that could help that family to go forward. Because you can have the home and don't have anything at all in there, where you're going to sit, where you're going to sleep, or, you know, how you're going to eat,
what you're going to wear.
What you're going to wear. So, you know, people insure the jewelry, the most expensive jewelry. So people insure the, you know, the things that are of great importance. So I would encourage persons to really start getting back into insuring your contents, because you put a lot of money into your contents and we don't realize it.
Because you would have accumulated them over time.
Right. Because we did not buy it one time.
Yeah.
We tend to not realize that, hey, it's important to insure these things. But because we buy it over time, we buy a PC and we fit it in, we lose track, you know. So I would advise, you know, persons to really look at insuring your contents. And I would say, on a whole, persons out there who have neglected to insure your property, to safeguard your family, think twice. You know, look around you. Look around and see your children and your husband, your wife. Look around what you have created and realize, hey, if we don't protect this, we will have nothing at the end of the day. One fire can take away every single thing from you. One hurricane can take away every single thing from you, and you don't know where your next step would be. So I would encourage everybody who have property, and I would encourage the bank to make sure that every person who have a mortgage with them, make sure, because at the end of the day, I would say this to any bank, when you're encouraging your clients to insure their property, just not speak about the building. Let them know how important it is to protect their family, because you would have given them that mortgage to create something for who? The family. So at the end of the day, they have a job to do. Because when you speak to persons as just insuring the building, they don't see the importance. When you give them that mortgage, let them know you gave them because, hey, you're creating an opportunity for your family to be lifted up, have a better life. So therefore, protect them. That is why you're insuring the property, not because the four walls, but you're insuring your two children that's going to be there sleeping at night, your wife, everybody. That is the most important. And I think that if we speak in that manner, and I think if the loan officers speak to the clients in that way, they would get those clients to see the importance of insuring the property differently to how they used to view it.
Mr. Herbert, thank you very much for speaking with us on ECCB Connect.
And thank you very much for having me here.
You're watching ECCB Connects, protecting our currency, developing our region. To view any episode of ECCB Connects anytime, any place, at your convenience, check us out on YouTube or Facebook at ECCB Connects.
We've come to the end of this week's episode of ECCB Connects. Remember, insuring your property means protecting your family. Join us again next week when we'll be back with another program.